Now, more of Phil's Gang on the Off the Wall Street Radio Network.
Are you ready? Hey, are you ready for this? Are you hanging on the edge of your seat? Out of the doorway, the bullets rip to the side of the beat. Yeah. Another one bites the dust. Another one bites the dust. And another one gone. And another one gone. Another one bites the dust. Yeah.
But we have to pass the bill so that you can find out what is in it away from the fog of the controversy.
The only one that's in fog is Pelosi herself. We have yet have the court ruling. If we do get it, we'll break in and let you know, but they're not expecting it until Thursday. However, we do have our guest, Robert Hilton Smith, and he is an expert on healthcare, 401ks, and he writes for MarketWatch, Reuters, Kiplinger, and he's my guest. Robert, how are you?
Good. How are you, Phil? Thanks
Good.
for having me on.
Oh, no, thank you for coming on. All right. You know, I really get a kick out of these 401ks because the 401k, first of all, if they're that good, then how come most of the folks, the working age households, are not going to have enough retirement to replace their current standard of living when they retire? I mean, there's very few of these seniors that can retire and feel comfortable or generate $73,000, which is about what you need, isn't it, to live comfortably a year? So, but I really want to go. But before we go into 401k, I just want to take your get your thoughts on the health care and the bill coming out. What do you think? Where are we going to go with this? Think the mandate will be thrown out, but everything else will be saved?
Well, it's tough. You know, I've been looking at the blogs and the various places on it, and it really still seems like the only thing that could be thrown out is the mandate, and that decision still seems to be right on the knife's edge. You know, Kennedy still seems like he could go either way. He was pretty tough in those in the questions, you know, in the rounds of arguments and stuff, but that doesn't necessarily indicate which way he's going to go. So I really can't predict either way. We'll have to see.
It just seems so difficult. How could any one of the judges go for you're forcing someone to buy a product? I mean, that to me is really incredible.
Well, it's tough, you know, because obviously we've got a healthcare crisis in this country.
Right.
You know, costs are spiraling out of control. You know, Medicare and Medicaid costs are rising. That's part of what's giving the government fiscal difficulties right now. And, you know, we've got to do something about it. And I'm not really sure. You know, it's a difficult thing to figure out how to control these healthcare costs. And so, yeah. You know, forcing people to buy insurance does seem it does seem rough in many ways. But what are the other options for controlling healthcare costs?
And talking about costs, let's go to our 401ks because cost of 401ks are ridiculous. The hidden fees, and I want to play a cut here for you, Robert, and then I'll get your response to it.
The fact is that the typical 401k investor is a financial novice. They don't know a stock from a line. And we give them a list of 20 or 30 mutual funds with really, really powerful names. You know, they sound like, gee, that's where I want to have my money.
What are generally the quality of the mutual funds and 401k plans?
Mediocre. I'm going to be real honest with you. With half the funds on the list, really dogs, what people would characterize as dogs, shouldn't be on the list to start with.
Boy, is that true or what?
That's great. I love that clip. That's where was that from? Out of curiosity, that is more true than I could even start to say.
Yeah, and I, you know, it's amazing that people, you know, I mean, let's go back to the 401k. It was this was from 60 Minutes, by the way,
great.
And that, you know, I think it's a failed experiment. The 401k.
I agree. I use that same phrase, failed experiment,
and it just doesn't make any sense for 401k because it was never intended. It was always intended for the executive, for the who doesn't have to. I mean, somebody making $250,000 a year don't have to worry about their sending their daughter to the hospital or to get a checkup. They got to, they don't have to dig in and take the money out. And I mean, this was to me a scam just to help Wall Street out. And Wall Street was really a cottage industry until they got the 401ks, right?
Oh, I mean, look at right now. Right now, as of 2010, the number out there is there's $9.5 trillion out there in mutual fund assets. I mean, think about that. And if they're taking 1% in fees every year, and I have these numbers from our places, we're talking $100 billion a year in profits. I mean, it's ridiculous, you know.
And the fees are just outrageous.
I knew there were just a ton more fees behind there somewhere, and we just had to find them.
Gerald Schneider of Bainbridge Island, Washington, fits the profile of a typical 401k investor. It's not because he's a baby boomer, Jerry is 62, or because he likes dogs. What makes Jerry a lot like the other 50 million 401k investors in America is that he just saw his 401k balance take a serious tumble. From the beginning of January 2008 to the end of March, Jerry lost $44,108. Those were investment losses that Jerry knew about. It's what he didn't know that's got him worried. After his losses, Jerry now has about $390,000 in his 401k. According to an independent audit of his account, Jerry would have tens of thousands more were it not for hidden fees.
Hidden fees, my Lord. Yeah. I mean, and the transparency is horrible. And you can, I mean, just like they take those stocks and they burn and churn them. They almost day trade them. And they hide the actual fees or the commissions and net asset value of the 401k. Where's the Congress with this right now? Where are we with all this? Are they going to finally protect these folks?
Well, unfortunately not, in my opinion. Right. You know, we've got this disclosure thing coming up that the Department of Labor did, which, is a step in the right direction. But it's not really going to solve the problem. You know, it's going to disclose part of the fees, but the hidden fees still, a lot of the trading costs aren't going to be out there.
And we'll be back with Robert and get more information about these hidden fees in a moment. Phil's Gang.
And now, more of Phil's Gang on the Off the Wall Street Radio Network.
And welcome back to Phil's Gang. You know, most of these mutual fund managers, they really are, I mean, they just underperform the S&P 500. And you know why? It's because mutual fund managers, they're lazy, they deliver terrible performance, their fees are outrageous, and they just want to be average. And I have a guest today, Robert Hilton Smith, and he was explaining to us what's going on, and he has a lot of experience in this. And Robert, I want to ask you, employers, they have little incentive to ensure their employees, the folks that work for them, that they have the best possible plan, and they always seem to choose, or they don't really care if these plans have high expense ratios. They pass all the expense on to me. The employers, I think they could just care less, most of them.
Well, they don't have any. You're exactly right. They don't have any incentive to care, unfortunately. And even worse, truthfully, a lot of them don't have the knowledge. The number that I've got in my report is employers are now passing 91% of costs on to employees, which is just ridiculous. And they don't have any incentive to care because, whether they don't have any stake in the game anymore. With a traditional pension, it used to matter, obviously, but now it's just, they cut them loose at 65 and whatever happens, basically.
Yeah, and so if the employer doesn't have incentive and the guy that's managing the fund, I mean, his performance not based on incentive.
Right.
I also think that the employee themselves, they're not sophisticated. They cannot figure out these menus of funds, and they have no experience. It's amazing when they did this. They said, we're going to put everybody in 401ks. We'll get them out of the pensions. Then they're going to be investors. They're going. They got an investor badge, like they went to investor school or something.
Take control over it. And that's great. I want people to take control over that, but they don't have the knowledge in a lot of cases. And it's not their their fault. They've got a full-time job as a whatever their career is.
Yeah.
And you're absolutely right when you said that these were originally created. They were supposed to be exactly for supplemental stuff for people, 401ks, for supplemental investors, for high-earning employees, and that's exactly what they were for,
Yeah, because you can't, if you dip into these things, it's over, right? I mean, you're dead.
Exactly.
I mean, you can't, and if someone's, well, first of all, if someone is going, if he starts out in life and he's, let's say, 28 years old and he has a family, I mean, how on earth is it going to be that he is not going to dip in this thing? I mean, especially if he's making $65,000 a year. To me, this is just ridiculous.
Oh, I'll give you an example from my own life right here. I mean, I'm 30, right? Just getting my career started. I live in New York City. where we all know how expensive it is here.
Right.
And when I'm renting right now and looking around for a place potentially to buy, and the only source of assets that I've got to put a down payment is my 401k. So I'm looking at it right now, thinking about taking a loan from it or dipping into it, which you can do under some circumstances, to pay for that down payment. But people have to dip into it all the time, like you said, for medical expenses, for divorces, for, the list goes on and on.
And that's why it should have never been passed down from the pension to 401k. And then when you look at all these fees, you have the revenue sharing fees, rep fees, finder fees, shelf-based fees, 12(1)B fees, distribution fees, performance fees. I mean, I'll be dead by the time I finish this list. Custodian fees, legal fees, transfer.
Exactly.
And most of the folks, they have no idea that they're paying fees.
Oh, not at all. There's a study out there that I cite. 70% of people don't think they're paying any fees at all. 70% of 401k investors don't think they're paying any fees at all. And that's why would they necessarily? Because they're hidden in there. They're in some. Half of them are in some table that says expense ratio. People don't know what that means, and the other half of them are hidden in page 60 of the Statement of Additional Information. So, I mean, it's ridiculous.
And the real problem is they're just relying on trust. They go to a planner. Just pick out a mutual fund for me, and they have no clue. These guys aren't going to pick out a great mutual fund for them. They're not going to. There's no incentive for them to do that.
No, they're not. They don't have any responsibility there.
No, and again, it's how and I hate it when I always hear on radio shows, especially where they say a fund manager or a planner will say, "Well, we only charge 1% of the assets we manage," and the guy's thinking, "Wow, this is cool, man! I keep 98% of all the money." I should say this guy should go to jail for saying that.
And you hit on it earlier too when you were in one of your other segments actually I might have watched it when you're saying they take these fees. They don't depend on performance at all. They take it in a good year and a bad year. So in 2008, where they lost $2 trillion in people's retirement assets in their mutual fund, based 401k assets, right? 401k and IRA assets, I should say. They still took home $120 billion in compensation and commissions. Like, what kind of system, what kind of incentives are that,
Exactly. And the folks, unfortunately for them, I mean, Phil's gang, that's what we try to do here. We try to educate them. We're a teaching format. We try to get them to learn how to, especially if they don't have time, they work all day long, to try to learn how to read a chart, at least learn how to read a chart so you can follow the momentum of the money and so forth and put stops in. And that's what, I built a business on this to try to help these folks. And the biggest enemy I had is when I listen to CNBC especially, and it's just so, these guys come on, or Fox, and these fund managers come on, and they just make it sound like, boy, this is the greatest thing since sliced bread, these mutual funds, and they're so misleading, and they're so deceptive. It's incredible. So what would you give your son for advice if he was going to invest in a mutual fund?
Don't. No, seriously, if he's got it, we do have these incentives to invest in 401ks, right? We've got these tax incentives, and sometimes we've got employer matches, right? And truthfully, a lot of times, because those are pretty big incentives, they can, it's not that the fees don't take a huge bite, but it does make sense to put some money, at least for a little while, into 401k to get your match and stuff like that. So that would be my advice, is that at least get your employer match. It's free money.
Well, it's interesting. My brother about 4 years ago called me, and he said, "What should I do?" I said, "Put him in an exchange-traded fund. Put them in an exchange-traded fund." And why don't we talk a little bit about the difference between an exchange-traded fund and a 401k?
ETFs are great.
Yeah, and when we get back from break, why don't we talk a little bit about that? And what is the difference? What's the advantage of the exchange-traded fund, and how the industry fought these exchange-traded funds? We'll be right back. Join the gang, Phil's gang. We're talking to Robert Hiltenswith.
And now, more of Phil's gang on the Off the Wall Street Radio Network.
Fees amounting to just 2% can devour half your retirement savings. That's according to Burt Malkiel, Princeton economics professor, author of the bestseller A Random Walk Down Wall Street, and a scholar who has spent decades analyzing the impact of fees on investments.
Can you imagine somebody saying to you, "Let me invest your money for you, and when you're ready to retire, I'll take half your money away from you"? If somebody ever said that, you'd say, you're crazy. I'm not going to let you do that.
Edward Siddell says this problem is epidemic. Siddell used to be an attorney in the SEC's Investment Management Division. In many of the plans that he's audited, he says investors were paying 3 to 5%.
There are some 401ks that I call lethal because they will kill you. They will absolutely kill your retirement nest egg.
And boy, that is so true. And we have an expert on 401ks, my guest, Robert Hilton Smith. Robert, let's talk a little bit about the exchange-traded funds compared to the 401k. I mean, the fees on the 401k, I've always said, look, if you deduct 2% a year for investment costs, pay a quarter what's left to Uncle Sam, lose another 2% to inflation, you're left with 1% a year. It takes about 70 years to double your money. So we come out with the exchange-traded funds, and boy, I remember CNBC, they would come on every day and don't get an exchange-traded funds. Oh, they're a gimmick, blah, blah, blah. And now, finally, they're pushing them. But why don't you explain why the exchange-traded fund is a difference?
Well, it was the same. It was the same story with the index funds when they came out, which are also. I mean, most ETFs are index funds, obviously, right? Mm-hmm. But the biggest difference is that most of these ETFs aren't actively traded, right? A lot of these just track an index like an S&P 500 and stuff. And what over time people like Morningstar and everybody and you guys have been saying is, look, all this active trading, it's just playing with stocks, just chasing the dragon. It's not really returning returns for investors. If it's returning anything, the managers are the ones capturing any of that. So the way the ETFs are good is they just track these, a lot of these really strong stocks, like those stocks in the S&P 500 that are going to get your returns over time at a low cost,
Yeah, and you don't have to wait till after 4 o'clock to get your money either. I always love that one. Well, so as far as your opinion of this new regulation is coming out that's going to be in July. Why don't you mention that a little bit? We'll talk about that. That's coming out, July? There's some new regulations to expose these guys? Yep,
July 1st. But most of us, those of us who actually have 401ks, won't see our first statement with the new regs until September 1st, that quarterly statement right there. So what they're going to do is, for the first time, they're going to try to put these fees, some of the fees, like I said, in a little bit more upfront and easy to understand terms, right?
Right.
So, you went through the whole list of them, and some of those are not even the whole list, and some of those are going to be put up there. The ones that are in the exchange, the expense ratio of the mutual funds, which is a whole summary of them. They'll be somewhere in your statement. Might be page 1, might be page 29, but it's going to show you, okay, you paid 1% in expense ratio fees this year. That cost you $500 or whatever it is. But it doesn't tell you the cost. That $500 isn't $500, right? That would have been earning you 2, 3, 4%. That depends how. Maybe not with these mutual funds, but anyway, some percent over time, right? So.
Well, the other thing too is most people don't understand that. They're trading, they're burning and churning these things. They're making money every time they trade. See, they're under the impression they buy a mutual fund. There's, say, 6 or 7 stocks in that mutual, and they just sit there. And somebody's managing them and like diversification. I love that too. Diversify, diversify yourself to the poorhouse. But I mean, but they don't understand that some of these are almost day traded.
Oh, they are. They're minute traded.
They're minute traded, exactly. Most people don't get that, and they're not told that. Oh, mutual funds are great. You just put the money, leave it there for 10 years, you'll be fine. And other guys are trading in and out, in and out, in and out. He's a day trader.
They have this reputation as being kind of like, stable investments in many ways because of the way that people invest in them. They're kind of buy and hold investors. They just stick it in there and they don't realize what's going on behind the scenes at all because it doesn't. None of those costs aren't disclosed, like we said. They're buried in the statements. And even now, it's still not going to be much better. You don't really when you dig into some of these things. Like I had my money, I'll tell you, recently in a what said it was a government bond fund, right? Mm-hmm. When I dug into it, guess what it was invested in?
What's that?
Mortgage-backed securities.
Oh my gosh,
that's government bonds.
That's government bonds, all right. We're talking with Robert Hilton Smith. Let me ask you: Do you how active are you with the legislation, with lobbying for the folks to get this stuff straightened out?
Well, I've talked with a lot of people down there, and I'm going to have, especially in the wake of this report that just came out that you read, and the reason you called me up, I'm going to be meeting with a lot more people down there and trying to argue that really, those disclosures are good. At least they're getting them a little bit more out there, but they're not sufficient. And really, like you said, I think the 401k is a failed experiment. And I'm trying to keep that message, hammering that message home. And I think there's some people. There's starting to be a chorus of people listening. Realizing that we need something better as like a solid foundation. We can't go back to the pension system, but we need some solid foundation out there that's not a 401k.
Well, Robert, I want to thank you for coming on. Do you have a website? Somebody go to?
We do. It's demos.org.
Okay, demos.org. We'll put it up on our site. And again, Robert, thank you for calling and sharing your experience with this nasty business of what they call 401ks and mutual funds. Thank you.
Thanks so much for having me on, Phil.
We'll be right back.
You're listening to Phil's Gang on the Off the Wall Street Radio Network. We'll have more in just minutes.